Chris Jackson, MEPS Steel Market Analyst. Thanks for coming back for another episode of Marketing Minutes. Good to see you.
No problem, Tom. Thanks for the invitation to come back. It's a pleasure to talk about the latest developments.
I think you're in our debut Speaking of Steel episode, and we've not actually seen you since, so it's great to get you back behind the microphone.
Yeah, no problem. Yeah, thank you.
Great stuff. So today you're going to take us through a bit of East Asia insight, which is drawn from MEPS's International Steel Review.
Yeah.
So in terms of our latest research conducted in February, there were, as we saw, all sorts of influences on the East Asian steel market. But what were the key factors influencing prices and sentiment?
Yeah, I think it's an area and a region that continues to be quite key to the global scene. I think everyone's quite well versed what's happening in Europe in terms of people waiting for the safeguard announcement and then implementation in April. Obviously, again, market participants are very much aware of what's happening in North America. Obviously, Trump's talk and tariffs and eventual possible or likely implementation of tariffs, again, are a big talking point. But again, East Asia continues to be fundamental to world affairs. Obviously, China is responsible for over 50% of global steel production. So, as the old prophecy says, I guess when China sneezes, the world catches a cold. And I think that kind of situation still rings true. Since the turn of the year, we have noticed that Chinese demand has been particularly weak. The Chinese manufacturing PMI for January was at 49.1, which we believe was the lowest figure since 2010, which again is systematic of the weak demand there. That has been exaggerated to an extent by the Lunar New Year, and we did get the trend that a lot of companies did take either closed early or opened up late, depending on how we saw it. Again, with respect to the official holiday. So again, with that, people have been watching the post holiday situation very closely, and it's fair to say that the hopes of a demand revival have failed to materialize. The next staging post, if you like, is the National People's Congress, which is being held this week, and people see that as a sign where, again, they'll be looking closely whether the Chinese authorities will announce another round of stimulus measures, which they have in the past, and possibly it may go hand in hand with reduced interest rate cuts, and again that may act as a little bit of a spur and a catalyst for the market. And again, what's happening in China, the near neighbours are obviously watching very closely, and similar to what's happened in China, we are sensing the demand weakness, poor market sentiment in neighbouring markets as well. The likes of Japan, South Korea, and Taiwan, we do sense that the majority of steel consuming sectors in those countries are performing weaker than anticipated. There's little hope of a demand recovery in the next 6 to 12 months. But again, those countries are looking at China very closely to see what will happen there and see if that will act as a catalyst for the short to medium term.
Okay, so I mean, one of the things that we're often reporting on at MEPS is oversupply from East Asia, and I guess particularly China from a carbon steel perspective. How much of a factor did that play in prices during February?
Yeah, well, I suppose in terms of pricing, there was very little movement in general. Obviously, the holiday caused a little bit of a pricing lull. Prices were very stable in February compared to January. If there was any movement, it may be a slight deterioration down. But I think it was quite clear that East Asian mills have very little incentive at the moment to reduce prices further. The demand is just not there. And on the flip side of that, buyers have little appetite to pay more for the material in the current climate. Obviously, the oversupply conditions are a key talking point. Obviously, with the tariff talk that we're all aware of around the world, and there's no doubt that Chinese supply or oversupply, people would deem it, is obviously a key feature of not just the neighbouring market but the global market as well. Interestingly, a few neighbouring countries, namely South Korea and Vietnam, are now taking steps to limit the threat of cheap Chinese steel entering their markets or even flooding their markets to an extent. And we've seen the likes of those countries lodge petitions, both for anti-dumping duties in South Korea on hot rolled plate, another anti-dumping investigation on coil. And in Vietnam, we've seen similar anti-dumping measures instigated on hot rolled coil against China and India, although duties were applied against China, not against India. So that's maybe a clear sign that East Asian mills are very conscious of protecting their own market share within their own markets. But again, on the reverse side of that, all East Asian countries, steel countries, are keen exporters as well. So obviously, any measures that are taken uh, could obviously lead to reciprocal action. And an example of that, Tom, at the moment is in the US market. Obviously, the we have March 12th as a date that's looming on the horizon, where a 25% tariff is expected to be implemented on all steel and aluminium goods into the US. Interestingly, two of those East Asian countries, Japan and South Korea, have had quotas in place. So they're the ones that will be directly affected by the measures in terms of those quotas being replaced. But the consequence of that is that everyone will be, if you like, on a level playing field. So maybe the likes of Taiwan, Vietnam, don't just see it as a threat, but possibly as an opportunity as well. So we all MEPS expect US prices to escalate and potentially escalate pretty quickly in a short period of time. And given the low production cost in East Asia, plus where freight costs are sat at the moment, it will certainly be a mouth-watering time for those countries because they will potentially have the opportunity to sell more volumes than what they probably have in recent times into the US, despite the aim and aspirations of what the tariffs are designed to do.
So I think we get the impression there that there's potentially an export opportunity for some countries, but
Mm,
in terms of what we see as sort of the domestic outlook
mm.
for the East Asian steel market in the months to come, what's sentiment like going forward?
Again, I think it's fair to say that sentiment is very much on the weaker side. Ourselves at MEPS, for our forecasting team, we are anticipating a modest, limited rise in East Asian steel prices, in the next 2 to 3 months. That's largely attributed to the up and coming People's Congress meeting, where, as was mentioned earlier, we are expecting another round of economic stimulus measures, which should act as again a spur and a catalyst for Chinese domestic and export prices, and again the knock on effect that will have on in neighbouring markets. The one caveat to that is what we've seen in previous rounds of economic measures. While it's provided a short term boost to the struggling property sector, those price hikes or price increases have been on pretty fragile ground, and prices have often reverted back to where they were. So we do expect a rise in the next couple of months, but over the longer term, there's a longer doubt that those prices will be maintained, and that's pretty much because demand is fundamentally weak at the moment. I think from a lot of steel using areas, demand is soft and weak, and that can encompass the automotive sector, shipbuilding, agriculture, construction, which has obviously been negatively affected by the recent winter season as well. And for those countries who are based in East Asia, but also export-led economies, their inability to ship to Europe and North America in the quantities that they'd like has been a frustration and will continue to be so. So again, from a sentiment and a demand point of view, we see little improvement in the next 6 to 12 months, but possibly a short-term spike, and again a question mark whether those figures will be retained in the longer term.
Okay, great summary, Chris. Thanks ever so much. It's given us a good insight into the sector. But of course, if people want to keep monitoring that and get a good look at the forecast and the prices going forward, they'll have to take a look at the International Steel Review. Keep conducting the research. It's great stuff.
Yeah, thanks, Tom, and thanks for the invitation. And again, an area that we'll be keeping a very close eye on.
Thank you, Chris. Cheers.